Welcome to Anafram Market Perspectives.
Anafram Market Perspectives, Friday. Market recap, trade optimism, AI momentum, and labor cost pressure shape Wall Street. Welcome back to Anafram Market Perspectives. After weeks of volatility, markets finally found some stability, thanks to a major trade breakthrough, encouraging earnings, and a cautiously optimistic shift in tone from global leaders. But there's still tension beneath the surface. Let's break it down. S&P 500 weekly recap. Tech leads, Apple disappoints. The S&P 500 staged a solid rebound this week, driven mostly by strength in big tech. Microsoft gained 3% on continued AI tailwinds, and Nvidia jumped over 5% after news that Trump may roll back restrictions on AI chip exports. Meta joined the party, up more than 4%, helping lift the entire software sector. Uber added nearly 2% after posting better than expected earnings. But Apple was the clear laggard, down more than 7% on week forward guidance, dragging down the broader consumer electronics space. Financials held firm, with Visa and JP Morgan both gaining. Boeing also surged, benefiting from new UK aircraft orders tied to the trade deal. Not everything was rosy. Fortinet slid over 6% post-earnings, and Google failed to gain traction despite easing U.S.-China tech tensions. Overall, it was a green week, but leadership was narrow, and some cracks in momentum remain. A softer Trump. Trade deals and diplomatic signals. The macro highlight came from Washington, where President Trump unveiled a new, complete and comprehensive trade agreement with the United Kingdom. While the U.S. will maintain its 10% tariff on UK goods, the UK will lower non-tariff barriers on U.S. exports, especially in aerospace and energy. Boeing was the big winner here. More importantly, Trump's tone toward China shifted. He signaled progress in negotiations and even floated the idea of lifting certain chip export restrictions. That helped calm markets and fuel midweek tech gains. He also hinted that similar deals are in the works with Japan, India, and Israel, suggesting his administration may be pivoting from confrontation to diplomacy, at least for now. Economic signals, strong surface, fragile core. The Fed held rates steady this week, with Chair Jerome Powell warning that tariffs are still driving inflation and that it's too soon to cut rates. His message, data, not politics, will guide the Fed's next move. And the data, mixed. Unit labor costs spiked 5.7% in Q1, while productivity dropped by nearly 1%. That's a troubling combo for companies' bottom lines. At the same time, ISM Services PMI surprised to the upside at 51.6, and jobless claims declined slightly, suggesting the labor market remains stable, for now. But there's weakness underneath. The trade deficit widened, productivity is falling, and global signals, from China's exports to Eurozone services, show only tepid growth. In short, things may look stable, but the foundation feels soft. Volatility dips, but markets remain vulnerable. Volatility cooled this week. The VIX ended near 22, well below the April spike, signaling a return to a risk-on mood. But positioning tells a different story. Commercial hedgers are quietly increasing short positions. That means institutional players are still preparing for the worst, even if retail investors are diving back in. A single negative surprise on inflation, tariffs, or rates could send volatility spiking again. Bonus recap. This week's picks in review. On Monday, we spotlighted 3 names. Here's how they performed. First, the iShares Expanded Tech Software ETF, IGV, stayed near its highs. It dipped slightly, but remained above the Ichimoku cloud with a bullish MACD. Microsoft and Palantir kept momentum intact, making it a stable play for AI and software exposure. Next, Palantir. The company delivered, earnings matched at 13 cents per share, revenue beat at $884 million, and guidance was solid. Despite that, the stock dipped slightly post-earnings as expectations were high. Technically, it's still in a strong uptrend. Finally, Uber smashed expectations, posting 83 cents per share, far above the 51 cents estimate. Revenue came in strong at $11.53 billion. The stock briefly rallied, then consolidated. the setup remains strong, especially as mobility and delivery segments keep growing. Final takeaways. Here's the week in a nutshell. Tech continues to lead, but not all players are keeping up. Trump's pivot to diplomacy brought relief, with a promising UK deal and improved tone toward China. Labor costs are rising while productivity slips. Bad news for margins and Fed policy. Volatility is falling, but sentiment is fragile. And our Monday picks, IGV, Palantir, and Uber, showed strong setups with real earnings power. We'll be back Monday with a fresh preview, inflation insights, and new trade ideas. Thanks for tuning in. This is Anafram Market Perspectives. Stay informed, stay strategic.
Thanks for watching. If you found this valuable, hit subscribe and share this with others. See you next time on Anafram Market Perspectives. Next time on Anafram Market Perspectives.